Be Wealthy and Smart, episode 1415.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the 90% chance of a rate cut in November. At least that's what traders are telling us is likely to happen. According to the Fed Funds Futures Trading tool, which is called the CME FedWatch tool, it's suggesting a nearly 90% likelihood that the Federal Reserve will dial back interest rates by 0.25% in November. This happened after a cooler than expected September producer price index reading, after also the consumer price index increased slightly more than expected. So consumers are more optimistic, producer prices are a little bit less. What that signals is that the Federal Reserve may in fact attain a soft landing scenario and reach its 2% inflation goal, and some people think that's already in the September inflation data. All of this provided relief and alleviated fears that inflation was not cooling off quickly enough for another interest rate cut. And while some people were speculating that there would be a 0.5% cut in November, I've always been in the camp it's going to be 0.25%. And I think that's more likely now, 0.25% in November and 0.25% in December. All of this good news pushed the S&P 500 and the Dow Jones Industrial Average to new highs on Friday and capped off a winning week as banking behemoths ushered in a promising start to the third quarter earnings season. The Nasdaq also is doing well and is just less than 2% below its all-time high. The major averages also registered a fifth straight week of gains, with the S&P and the Nasdaq up 1.1% for the week, and the Dow was up 1.2%. This is a good start to the third quarter earnings season, as the direction of interest rates help profitability for companies, help them earn more money, and more earnings, of course, leads to higher stock prices. And despite heightened volatility heading into the U.S. presidential election, UBS is very bullish on the upcoming earnings season. They said while headline S&P 500 earnings per share growth will likely slow to about 5 to 7%, from 11% in the second quarter, a large portion of the slowdown is coming from the energy sector due to lower oil and gasoline prices. Excluding the energy sector, the S&P 500 profit growth should be 8 to 10%. Meanwhile, profit growth is expected to broaden out among more companies, but UBS still thinks the Magnificent Seven will lead the way. About 415 of the 500 stocks in the S&P 500 were heading for gains on Friday afternoon. So it sure looks like we have more companies participating now rather than just 7 stocks providing most of the return. There were also 55 stocks in the S&P 500 that traded at new 52-week highs on Friday. 32 hit new all-time highs. Some companies that hit all-time highs were Netflix, Marriott International, O'Reilly Auto, Royal Caribbean, Ralph Lauren, Bank of New York Mellon, BlackRock, MetLife, Caterpillar, Uber, Arista Networks, and Fortinet. October is known to be a volatile month, and we'll see how the rest of October turns out for us. Meanwhile, healthcare and small-cap stocks may receive an additional boost in November, since November is seasonally their best month of the year. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.